What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm going back into a company that I did a quick little short about, and I said that you should probably stay away from the stock. It was back on August 9th, I believe I put out the short, and stock was at about $270 a share. So as we see, the company right now is sitting here at $213, and the company in question is SNDL, formerly known as Sundial. Incidentally, that is the symbol SNDL here on the NASDAQ. And again, this stock, $2.13, up about 0.5% on the day. And we're sitting with a market cap just a little bit lower than where I first looked at it. We're sitting here at about 500 million in market cap. And, let's look at the chart. There's a 6-month chart right here, August 9th. This dip, 270, is where I made the video. We discussed the reverse stock split that happened previously, right before I made the video. And I was talking about how the revenue, couldn't support the current stock price with the reverse stock split, with, of course, all the obstacles that we know in the cannabis industry, retail industry. There were multiple reasons as to why I said I personally would not invest into the company. We had a run up here from $2.70 to above $3 as the company posted earnings. Then, as you see, it goes from 3 to sub 2, then makes the same exact run up to 3 going into next quarter's earnings, and then, of course, sells off immediately back down to 2. So one thing I'm noticing here is that right now the bottom is around sub 2, right? So if you get in at a 285 after a big rally like this, and then you lose 30-40% over the next couple of weeks, you can't really be surprised. You have to remember, investing into a company, a couple $100 million market cap, right? This, at the end of the day, this is considered small cap speculative play, right? And just because it's a small cap company doesn't mean it's going to go higher. Just because it's on Wall Street Bets doesn't mean it's going higher. Just because it's a cannabis company doesn't mean it's going higher. Just because you could afford more shares than of this than Apple, because it's only $2, doesn't mean it's going to go higher, right? So there are a lot of ways that people look at stocks, and none of them really mean that it's going to go higher, right? Because what helps a company go higher? Very little debt, being net income positive, consistently seeing increases quarter over quarter, year over year in your revenue and your overall business, right? Reports of gaining more market share, right? These are the things that help a company grow, and more importantly, help a stock price consistently increase in value, right? Analysts come out and consistently upgrade the stock, or they'll come out and they'll say Sundial's at $213, there's a $10 stock, right? It's an announcement or a report like that continues to make these companies grow and grow year over year. And again, if they pay dividends, you're talking about now compound interest. It just becomes too easy when you look at the right companies to invest into. Now, I'm not saying this company is not worth your time. However, it's just a very rough story, and it's a rocky road ahead of you. You need to understand that, right? Getting in here at $2.13 might be a decent buy. However, in the short term, it might pull back to $1.20 first before it rebounds, right? So you need to understand what you're getting yourself into. That being said, as you can see, again, sub $2, and it looks like it had a little bit of a bounce. So the way I would play this now is actually in the next couple of weeks, or maybe the next month or two, right? Because we see the bounce off the $2, and now we're back into the low 2s. So if it runs up to like 230, 240, and then immediately curls down and makes new lows at 180, 170, then we know that $2 is not the bottom, and perhaps this is not the time to buy, right? And the reason why I'm kind of saying it like that is because before I just get into my end little monologue here, we're going to look at stock charts real quick. We're looking at the daily. You can see you have a potential, well, you have a cross here on the MACD, and on that cross, the stock jumped up to about 220 and change. Actually, that was before the cross, but here on the cross, you can see not much movement, right? You didn't get an explosion like you would potentially see with another brand name stock when it has the MACD crossing. So, it didn't deliver on that front. But again, with the way it's been swinging up and then immediately pulling back, I would wait to see if like it runs up here 230, maybe even 240, this moving average, and then it rejects and pulls back to a serious sub $2 and continues to make new lows. But RSI 43.5, right, kind of mid-range. So, you know, I guess it really hasn't made up its mind here in the short term as to where it wants to go. But again, in the long term, as we see, we are trending basically in one direction. Bottom Bollinger Band, $1.84, right? That's what I mean. Give it a couple of days or a week or two, and it'll probably pull back and potentially break that bottom Bollinger Band of $1.80 and change. RSI on the weekly, sub 40, looking more attractive. MACD relatively flat, not much going on. However, 50-day moving average, which really isn't that much time when we're talking about investments, not necessarily trades, but we go back a couple of years, look at this, $13, $14, $15 moving average. Now we're down to $3.62, right? So basically, traders and investors alike are seeing a lot of red flags when it comes to this situation. This right here, what was it? August 9th right here is where I made the video again, 270 and change, coming right off that reverse stock split, 1 for 10, just a couple of weeks before that. And then, like I always say when people ask me about earnings, are they going to be good, bad, or ugly? What you need to do is position yourself on a dip, ride the anticipation going into earnings, and then sell before they post earnings, right? And if you would have did something like that, you would have got in a situation like this at about 2.5, and you would have gotten out at, look at the high on that at the top of the screen. I know it's hard to see. 358 was the high. Right, so you buy it at 250, you sell it at 350. They post earnings. Doesn't matter what the hell they post because you just made a serious return. You understand what I'm saying? So that's really the best way to play earnings, unless it is a long-term investment, a company you really plan on holding for years, and you hold obviously through earnings. Or if they pay dividends, you're going to continue to hold and obviously do a drip or collect your check. But going into earnings, you can see the run up. Look at that. Explosive jump in revenue, going from 17-20 million the quarters before we last looked at to 173 million in the quarter. Absolutely phenomenal. EPS absolutely horrific, with a huge miss according to what analysts were estimating. And again, like I said, what happened? This is not real. This is a BS meme stock. They're already out. You probably bought after seeing these numbers potentially at 3 and change, and then the company immediately pulls back to sub $2, hits a new low. Right? They established that as the bottom, so now you're seeing the bounce off the quote-unquote support, and now what happens here? Look, all of a sudden you have a massive run-up to, look, 260, 270 going into earnings, right? So you could have got in at 210, sold at 205, sold at 250, 255, made yourself a massive quick return going into earnings. Then again, you see they beat on the revenue side with an even greater miss on the EPS side, posting minus 30 cents. Analysts were estimating like plus 5 cents a share or something like that. But for some reason, the stock runs up to 3 and change. That's what I mean. It's stocks like this that really make me laugh. Because if any company deserves to run from $2 to $3, have a 50% rally in 6 weeks, it is not SNDL. I'm going to tell you that much right now, in my opinion. But as we see, looks like, it just bounced off this bottom Bollinger Band here of about 196 and change. It's bouncing around this fib. Bouncing off this bottom fib level of $1.96, not bottom Bollinger Band. Pardon me. But coming up here now, it's bouncing around this fib level of about 213. But again, we have to see if it continues to climb back up to a healthy number and potentially get above that moving average of like 240, 250, whatever it was, or if it's just going to begin to hit a top and just continue to sell off into sub $2. Either which way, I really don't think I'd be a buyer on this one. I mean, they started out supposedly selling cannabis as a wholesale business, then that didn't work, so they had to rethink their inks, but they also spent tens and hundreds of millions of dollars now. They're buying out other companies and taking stakes to take over their retail locations. So now they have like hundreds of retail locations under their belt, but also at the same time they can't find a viable business model to actually sell the cannabis. So then they put that on the back burner and they bought out a liquor company, and now they're making more money from the liquor than they are from the cannabis. Plus, when it comes to these cannabis retailers, we're hearing that they're running into multiple obstacles, whether you want to talk about safe banking overall as a whole, or if you want to talk about the fact that people are just like breaking into these dispensaries and just stealing 6-7 figures worth of product. Also, the fact that the companies have that much product on hand because there is a surplus of inventory, and now the supply is outweighing the demand, which simple economics tells us that prices now begin to plummet, which of course doesn't help the business overall, even though they may potentially move a little more inventory than they would have the day before with a little bit of a cheaper price. And basically, again, overall, like I said with Bed Bath & Beyond, the reason why that company is falling off a cliff is because there's nothing proprietary, right? And now you have a situation like this. It's like, yeah, they can have their own little brand, like, oh yeah, this is the Sundial, CBD vape pen or whatever that you can only get at our locations. And it's like, yeah, that's cool, like, that you got a couple of things in the pipeline, but also at the same time, it's like any weed dispensary or cannabis retailer you walk into is probably going to have a similar or better product, right? So that's why I'm not really wrapping my head around this whole situation, even though I'm seeing the revenue numbers there. However, I will say in the short term, it does look like perhaps this sub $2 may be the bottom right now if we work out the valuation, even though they're losing more than they're making, having a jump from 17 million a quarter to 230 million in a quarter, yet somehow you're still net income negative. I really can't understand how that happens. But on the flip side, again, does look like right sub $2 may be our potential bottom. We have to see in the next couple of weeks if we pull back to that level again and have a bounce. If we see multiple bounces off that level like we've been seeing here and back here in October, then we can say, all right, you buy it around $2, you tuck it away. However, again, still coming off a reverse stock split, and now, even with these phenomenal jumps in revenue numbers, it doesn't matter because they're still beating the crap out of the stock, and no one wants to hold it long term. So we have to see again if it maintains that level or if it breaks in the next couple of weeks, and then we're going to have to reanalyze again at 170, 160, 140, or wherever the heck it's going to go. But I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. Just like everyone on YouTube says, if you like the video, thumbs up. You like the video, subscribe. But more importantly, again, new year, the week is over, right? Just wanted to do a couple of quick videos for you guys, but take the weekend, de-stress, don't beat yourself up about hindsight, price entries, or whatever the heck happened last year, last week, right? It's over, it's done with. Control the controllables, stay positive, stay confident, stay focused, stay enthusiastic, right? Let's be excited about this year. I have a feeling a lot of people are really going to turn it around for themselves and for their families. So again, thanks for stopping by. Love you all. See you guys in the next one.